Hello there, my friends. Chris Marcus here for another episode of Inside the Markets. Really excited to have a first-time guest on the show who is Greg Mannarino of TradersChoice.net. And as I've been searching out great voices to learn from who are grasping what's really going on in the market, seeing the same things I am, Greg, I've loved your channel. I love the information you're sharing. So it's a pleasure to have you here today. And how is everything going with you, my friend?
Well, it's great to be here. I'm happy to be here. Things are going, I guess, as well as they can in this environment. And I don't know, almost don't know what to say. I'm actually speechless about what we're seeing here in the markets, as I'm sure you are as well.
Yes.
All the goings on here, it's pretty wild stuff.
No shortage of fascinating events. So how about we hop right in, and to start with, interview I caught of yours from last week where you mentioned something I felt about how the first thing you're looking at is the interest rate, because so much of the rest of what's going on hinges on that. So maybe just start off, talk about what you're seeing, why you're looking so closely at the interest rate, and what you think is happening right now.
100%. Before I look at the markets, I'm always looking at the 10-year yield. It's the benchmark, as you are well aware. I'm certain most of your listeners are. What that tells me, just right off the bat, is if rates are being artificially suppressed, it's just so simple to understand what this does. It opens up a doorway for cash to flow into the stock market, where we are clearly in some type of a distorted environment where bubbles are forming. Cash is moving into areas which shouldn't be going, coming out of things which should be going into. So that's the way I gauge this for the most part. And I've been broadcasting this for years. And I think people are finally catching on to why it's so important to understand the bond market, the debt market, the largest aspect of these markets. If you can kind of get a handle on how this mechanism works, and understand that by keeping those rates suppressed, again, it allows cash to flow into this stock market. That's, been the premise of quantitative easing. Keeping rates suppressed here was deliberately instituted to push cash into the stock market, to push cash into real estate, inflating a housing bubble. That's what we have. So instead of fighting it, like a lot of people want to do, we can't fight it. So embrace it, make it work for yourself. It's that simple.
Yeah, and it's funny you mentioned that. Even Ben Bernanke in his op-ed in the Washington Post back in the end of 2010 even said the point of putting the money in is to give the appearance of wealth, which it did for a while. What he and the other bankers never mention is that when you undo that, you're going to get the opposite effect, which appears to be happening now. Do you think we're at the point where the bubbles are beginning to pop? Or, I know they're backtracking a little bit, but do you think we're finally here, or is this another false start?
I believe they're going to continue the charade, because that's what this is, for as far as they possibly can. And I think, unfortunately, the people got played like a grand piano last week in this market here with regard to what happened with the Federal Reserve and our president. I called that phase one, the Trump-Powell put, and then we got phase two, which is the this trade charade between the United States and China. This truce. Are you kidding me? It's a truce, and everyone was winning here. And then they propped up crude oil. I outlined this for people before it happened. Sometimes I really do scare myself. If you watch my work, you probably go, "Whoa." It's just because I think about it. I'm obsessed with it. It's the truth. The markets obsess me. I think about them around the clock, and I try to gauge what are they going to do next. Because look, it's a game they're playing here. It's in my opinion here, and I've been saying this for years, that the world central banks, ours especially, is a serial bubble blower. They blow these bubbles, and then they just to deflate them to transfer wealth from one group of people to another. It's just such a simple mechanism. So what we're seeing now with this new Trump-Powell put under the market, with this truce here, with crude oil being propped up, means cash is going to flow into the stock market for a little while longer. People were panicking when we had the October market correction, whatever you want to call it. Oh, this is the big one. I'm in here buying credit spreads on the long end. Well, I think when people start to get scared and panic in this environment, that's when you need to get long, because they're not going to stop. And how do we know that? Just watch the bond market, like we were talking about right at the beginning. You want to know what's going to happen in these markets? Watch the 10-year yield. That's it. It's going to tell you what's going to happen here down the line. And of course, we have to be cautious. We have to watch for reversals or something, but I don't want people to buy into any of the distractions that they're being shown, keeping them to look here, don't look here. I think the place to be right now, unfortunately, and I mean that, unfortunately, because it's just a charade, is in equities one way or the other here. Let it work for you at this particular time here. At the same time, be diversifying out of use the profits you make in this market to get into hard assets, something I've been talking about since like forever now. I do believe sincerely that precious metals, for example, are massively undervalued. Silver's still my favorite asset of all time, physical silver. And I will never change that stance. Maybe one day I will, but I can't. That's a way, way far off.
Right. And in terms of the interest rates, like you mentioned last week, the Fed starting to change the story a little bit. Seeing the way the real estate market has gotten pounded this year, I'm a little surprised that they haven't started printing again already. What do you think is December rate hike and then they pause, or what are you thinking based on what we've seen over the past couple months and last week?
I really believe that we have a new stealth round of quantitative easing going on. What people don't understand, and I know you do, is that the Federal Reserve isn't magical. And I've been trying to relay this message for years. They don't have any supernatural power. So when they say they're going to keep interest rates low or keep rates suppressed, how do they do it? They got to add digits to a screen. They got to print cash into thin air and buy the debt. So, what does that sound like?
Yeah.
It's a QE. It's just never stopped, and it never will. They're going to keep rates suppressed for as far as the eye can see until we hit that wall, going into hyper Mach speed, whatever that is. But we were starting to see some weakness here in housing. There's no doubt about it. It's everywhere. There's weakness everywhere in industry. But again, it comes back to the fact that they have to keep the illusion real. And how do they do that? They do that by keeping interest rates suppressed, propping up that stock market, making people think that the environment we're in is real. And it's not. It's completely fake across the spectrum. And as we discussed, we got cash moving into things where it shouldn't go, coming out of things where it should be going into. And these distortions will correct to fair value at one point. When? Who knows? I don't even care when. I just want to capitalize on it. That's it. Look, I am a capitalist in the truest sense of the word. So if someone wants to give me a gift, I'm going to take it. And this market is a gift right now. So let it give to you, and then take a little bit of it and pay it forward.
Period. Yeah. It's incredible, especially once you grasp the Austrian cycle. And I went to Wharton, was working on Wall Street. Nobody ever mentioned any of these things. And then as soon as you see it, it's like you have the decoder ring for trading the markets when you really
I like that. The decoder ring.
Which, along those lines, it's fascinating. Again, we've seen Trump bashing the Fed, saying they're raising interest rates too quickly, which I have mixed views on, because we're at that point where either you continue printing and blow out the dollar, at some point you have to raise interest rates. So I agree that, as rates go up, that's going to be a problem. What gets missed is that it's really the last decade of 0% rates that, if we had done something before that, might have made a difference. I mean, we have back in 1980, Paul Volcker raises rates to 20%. In 2006, Greenspan's last hike was up to 5.25%. So here we are at 2%. And Trump, who said coming in before he was elected that stock market's a bubble, audit the Fed.
Yeah.
Curious your thoughts on this. Do you think he's just getting ready to place the blame? Is this what he believes? But it's like with the trade wars and everything, it just makes no sense. And you wonder if there's something else we're not seeing here. Curious your take on any of that.
Sure. Well, first of all, I forgot to answer a part of the question you had asked me. I do believe we're going to get a rate hike this month here,
Right.
25 basis points. That's baked into the market. I think the stocks will rally off of that because they are understanding that. I think the Fed's going to wait a little bit after that, especially with all the clues that were thrown out here, how we're just below the neutral rate. I mean, it came out of Powell's mouth. It came out of New York Fed President Williams' mouth. I mean, so they're setting the stage here. It's a game. Oh, my God, is this a game? So, with this whole thing, with regard to, look, candidate Trump, in my view, is a lot different than President. He spoke out very loudly against the things that we're seeing right now. I think a lot of people believe, me too. I fell into this myself because I wanted to see a difference, that things were going to be different, but it's more of the same. I had a video this morning where I explained to people that there's a collective entity that controls these markets, and you are more aware of that probably than most people are. And everything that we're seeing right now is a part of it. It's all just playing out. It's all a game. And the middle class, unfortunately, gets their crumbs thrown at them, and it's supposed to be happy with it, while cash continues to flow to the upper end of society. That's the mechanism. That's the way it's going to be. It's never going to stop. And unfortunately, it's going to be the middle class again pays for this. Right. When this corrects to fair value. So I want people to understand that the environment is fake. We are going to get a correction to fair value. The middle class is going to lose. I know there's a lot of speculation about how first of all, look, President Trump owns it now. I mean, he's the one who's been saying the Fed needs to keep rates suppressed. Really? Why? So we could continue to rob savers who aren't earning a real return on their accounts, their interest-earning accounts like a savings account. It's insane. They're being robbed on a grand scale, but people think this is a good thing because they hear it. People don't think. That's the truth. They just don't think. They exist in some kind of induced trance. I would put it that way.
It's the greatest hypnotic experiment in history is the way I think of it sometimes, where the numbers are simple. He just told, and I heard a lot of people that I've talked to over the years, they say, outside of finance, they say, I don't want to ask because I feel like I'm going to be stupid for asking this question.
Yeah, well, that's true too. Is it any secret why don't know the things that you and I and probably a lot of your followers are aware of? Of course not. It's not a secret. They got to keep this, and they got to keep people divided. The divide and conquer strategy always works. Look here, don't look here. Get these people angry at these people, so these people hate these people, and so they don't really see what's going on right under their nose. And this is not new. This has been going on since time immemorial.
Yep.
I tell you, wild stuff.
So I'm curious, I think a lot around the clock, perhaps like you. I wonder how this all ultimately plays out because, they're talking about, well, maybe we'll cut taxes here, cut spending here a little bit, but the numbers.
Those are the crumbs.
Yeah, but you add in 200 trillion of unfunded liabilities. We have reports of missing 21 trillion, so God only knows how much is out there. But it seems at some level, whether it's the implicit default, just printing the thing into oblivion, or an explicit default restructure. Again, Trump does have bankruptcy experience, but it doesn't seem there's any logical way outside of some sort of default reset at some point. And I'm curious what you see as the end game of how this all unfolds.
100%. That's how it's going to end. They're going to run this thing into a wall. There's no doubt about it. It's something I've been talking about since forever. That's why people need to bet against the debt, become your own central bank for the long run, but use the market to your advantage right now. That's what I do. There's no doubt about it. That's their plan. And I do believe, as crazy as this sounds, as we are watching the middle class be decimated, and we're going to move back into a two-tier society, the haves and the have-nots. The middle class always gets. The middle class never gets to keep their wealth. Right now, middle class is all gleeful. Oh, their investments are looking real good. Their houses are going higher. Well, it sounds very familiar, doesn't it? Didn't the same thing happen in 2008? But this time, how are they going to fix it? I mean, they just printed all this cash out of thin air. All the world's central banks working in concert with their respective leader. I think it's the other way around. I think the central banks are running the show. But again, there is no doubt that we are going to end up in a situation where it's very simple. All these extra bills that have been printed, all of these extra digits that have been added to a screen, at one time, they're going to start chasing the same amount of goods. And what is that? It's just so simple to understand. When that happens, when the money velocity starts to kick up, something I've been talking about for years, that's when we're going to have a problem. When all those bills start chasing the same amount of goods, and then they're going to have to institute a new system at one point. I don't know what it's going to be. I have no idea, but I'm sure that it's already in the works somewhere, because this system, it's probably going to go on for a little while longer, because they're not done, in my opinion, getting people to put cash into assets where it shouldn't be going. Because again, Federal Reserve is a serial bubble blower. They do these on purpose to transfer wealth, transfer. It's the same thing we see over and over. And this is no different, although this is the biggest that we've ever seen by exponents. So it's going to be the worst by exponents when we finally hit that wall.
Yeah, and it's interesting, Greg, how you mentioned as the dollars are removed, chasing them, which, you know, again, to many Americans sounds like an alien landing in their front yard. Yet look at the foreign currencies where they're struggling already, because as the interest rates are going up, the dollars are being removed. And again, I agree with you, some point that's going to filter back here. So perhaps just in wrapping up, if you could let folks know where they can find you. I think you're a great resource for getting through these challenging times, especially people who don't have the background you do. I know you share your trades. I'm looking at your website and seeing you have the How to Trade Options book, which is a former option trader. I'm excited to download that one when we're done. So just let folks know some of the things you do and offer and where they can find you.
Everything about me, everything you want to find out about me is right on my website, traderschoice.net. I try to keep people on top of what's going on so they can make sense of this thing it's a thing that we are in right now.
Yep.
And it's incredible. It really is. Well,
Greg, I sure appreciate all you're doing. Appreciate you also making some time to join me on the show today. Great to finally catch up with you. Keep up the great effort you're doing. I think it goes beyond just finance, because yes, there's that part, but really just educating people, letting them feel empowered that they don't have to just follow Wall Street's nonsense. And so keep it all up. And thanks so much again for joining us today.
Thanks for having me. Great to be here.